Good morning, everybody. Welcome to another trading week. Thanks to Adrian for his rather extended first session. That's 40 minutes in. He obviously likes the sound of his own voice, or maybe you like the sound of his voice. I don't know. Okay, so quite a few people, new trend signal clients. We have two workshops during the week. It alternates between, always on a Monday, first thing on a Monday, where we discuss the current trends in the markets, any setups. That's what Adrian does. My focus is purely on try to explain some of the economics without trying to confuse you in any way, just to sort of ensure that you're aware of what's coming out throughout the week, and just so you're prepared. This is a long-term sort of business. I mean, I've been in this since 1982. You get into a bit of a routine. One of the things when you start out, of course, is that you're not altogether sure what you should be doing. Reading the charts is key, obviously. Getting a decent trading plan together, getting some sort of consistent approach to your trading is absolutely vital. And there's a bit of learning on the way with regards to sort of, the sort of thing that people talk about in the markets, because it does have an effect on the markets that we're trading. We don't want to be caught offside or caught unawares when some hugely major event comes along. I'm not here to try and tell you where the markets are going to go basis the economic data. The charts or the technical analysis is key. That's what trend signal is for determining where the markets go in the short term. Obviously, in the long term, the fundamentals are borne out by where the market goes. But that's in the very long term, as I say. When you get a knee-jerk reaction when equities fall 150 points or the dollar rallies sharply, it's as a result of a little bit of a kicker from economic data or some news. But where it goes in the very short term is really basis the price action and previous price points, etc. Anyway, we're at the start of a new week, a new day, a new week, a new month, and a new quarter. So as a result, we have a few distortions from the previous week. I'm just going to summarize what has been going on. We've got a short week this week. That's because we have Good Friday. Good Friday is a holiday in North America and across the Eurozone and in the UK. So it is a market holiday on Friday. But what's interesting, actually, we've got a very key bit of data that I'm going to explain about in a second called non-farm payroll. That actually comes out on Friday. Yes, they release the most important economic data for the week, for the month, I should say, on a holiday. Which means if you trade the markets, the US markets, that is, so trading the dollar, trading the S&P, Dow, etc., the first time you'll be able to express your view on that data will be on Monday morning. The UK markets, as you know, are shut on Easter Monday. So, in fact, the first day that the UK markets can express their view will be Tuesday. So, an interesting few days coming up, so a very shortened week. What I'm going to do as well, for those of you who are starting out, I'm going to just give an overview of what happened last week. Last week, we had concern over growth in the US following comments by the chairman of the Federal Reserve, that is Ben Bernanke, who had two speeches last week, in which certainly in the first one, this time last week, on Monday last week, he expressed concerns over the employment data and felt that there were seasonal factors that had produced some of the strong growth in jobs, and he expects there to be a few bumps along the way now as things normalize. So that's something that we've got to look forward to. I say look forward to or discuss throughout the week, culminating with the non-farm payroll. As I say, non-farm payroll, it's called non-farm payroll because the US excludes the more volatile farming sector, which has a lot of seasonal jobs in it. So it's called a non-farm payroll. But to you, me, and the Gatepost, it's really the employment data. And it's a very, very important piece of news or data. Obviously, if the economy is picking up, jobs will be created. So there's a direct correlation between the number of jobs and the economic output and prospects. Okay, so other than that, the euro, we had problems or concerns over the peripheral Eurozone economies last week. Spain was very much in the spotlight with the unveiling of the budget, another austerity budget as it's called, having to make savings of at least 50 billion, which was outlined by the new government. So that sort of pressured the markets a little bit. Overall, last week, we talk about risk. You know, when the markets all rally and commodities come off and bonds come off, that's called risk on. Risk off is when the opposite happens, when equities come off and bonds rally, etc. It was mostly a risk off week last week, with certainly European equities slipping back, not so much in the States. The FTSE actually fell around 1.5%, that's about 86 points. Contrary to that, the Dow actually ended up 67 points on the week, which is a roughly a 0.5% gain. Gold was up about $25, which is about 1.5% up. Crude oil, conversely, was actually down. You'd expected it to be up, but in fact, I think there was talk about releasing some of the strategic reserves in the US and upping production in Saudi. So crude actually fell just over $3.8, so that's a move of about 3.5%. So that's really most of the sort of summary of what happened last week. The US dollar and the euro mixed, really. Slight positive bias for the euro, but overall a bit of a mixed week, as I'm sure for those of you who attended our workshops and last week will know. We've been stuck in pretty narrow ranges in currencies, to be honest, and in commodities, not so narrow range commodities. Generally, gold, crude being the most actively traded ones, tend to trade in a lot more volatile range, but still stuck in that range still. Okay, good. Thanks very much for listening. I'll just put you on hold again and pass you back to Adrian for his final words. Thanks for listening.